Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It's Sunday the 9th of January 2022 and we're going to be talking about whatever we talk about really. It can vary from week to week, depends who comes along. We talk about cryptocurrencies, blockchain, DeFi, NFTs, ICOs, STOs, any other three-letter acronyms really. All depends upon who shows up. So it could be quite a wide-ranging conversation. We record these sessions each week, so do hope that you enjoy them. Do click on the subscribe, the like, make comments, or even better, come along to a future session and see what they're all about. The sessions are open to everybody, novices and experts alike. Let's see who's going to come and join us today. Hey, Peter, how are you?
Okay, you?
Yeah, not too bad. Living the dream. See who else is going to come and join us today. We've got someone called Unicorn on today. I wonder if they're going to introduce themselves.
No, it's me, not a unicorn.
Fernando, hello. How's it going?
Hey, oh, good.
Yeah, excellent. So what's new in the world of crypto for you folks?
Oh, man, what's not? What a week.
And we're joined by Stephen today. Hello, Stephen. I like the mime that he's doing now to make up for it.
That's the mime for it's still on mute.
Yeah. Stephen, that's so 2020. I'd have thought you'd be over that by now.
Oh no, I'm stuck in 1920. What do you mean?
That
was a good year.
He stopped during the dot-com boom.
Only 30 million had died of the flu by that year, not the full 60. Oh, we mustn't joke about these things.
Absolutely. So Fernando, what's going on? You're saying it was quite an interesting week in crypto last week. I know prices were plummeting and people were probably getting close to jumping out of buildings.
No, I think people got used to it already, you know. But I mean, look, it has been a week. I was expecting this, by the way, you know. I warned people when it was around 59, 61, between 59, 61, I told people, you know, I don't know what is your strategy, you know, for your Bitcoin or your crypto in general, but, you know, if it came back from 69 or whatever it was, the top, I can't remember what was the all-time high, to be honest.
I think it's about 61, wasn't it?
No, all-time high, no, 67, wasn't it? Or 68, I can't remember.
We're talking dollars, yeah?
Yeah.
Okay.
Yeah, dollars. I always refer to crypto dollars, you know. And when it came down then to 57, 58, 61, I told people it lost, you know, it came down back so much. It means we're going to go downwards. There's no other way. And it's very interesting why this is happening. Yeah? But I know some people who cash out everything at that point, you know. So,
well, it'd be interesting because I know Peter monitors things in terms of volumes and other stuff. I don't know, Peter, have you got any insight into what you've been seeing actually on chain in terms of transactions that might give us any clues?
I mean, it seems to be kind of people that bought kind of in the 60,000s are panic selling. So new people who bought and all kind of panic selling the coins which you bought at like 65,000 to the same people that bought them for 45,000, basically.
Yeah, I think we're seeing a repeat of the end of 2017 where it peaked at 20 and then because it started dropping, I think people started exiting and suddenly before you knew it, it was down to about 8 or 6 or something crazy. It's almost like a replay of that, just with slightly different numbers. But I think you're right that the new people have come into the space, that all they've seen is a chart that shows this lovely progression. And when it falls off the edge of a cliff, they think, oh, wow, the end of the world is nigh. But if you compare about, like, even if you'd bought at the peak of the peak before it collapsed in 2017 at 20,000, it's still double where it was 4 years ago. So it's all about having a strategy.
Your point is a good one, as in all speculative markets, and it is purely a speculative market. The people that get burnt are the ones that have bought latest. So they're the most panicky ones, are the ones that will have bought at the top. So they will have lost. It'd be interesting to know if Peter's got the volumes as to which of the many millions of people now holding Bitcoin were the ones that caused the price to fall. Because my sense is still, I haven't looked at the stats recently, that you're still looking at 75 to 80% of hodlers of Bitcoin that are hodlers. They're evangelists. They're going to keep in Bitcoin
It's
till
not that, yeah.
it reaches 1 million per Bitcoin or whatever they think it's going to meet.
I would urge a caution on that statement, because partially true, yeah. So the big whales, the guys, the OGs, they all are keeping the majority of the coins. Let's not forget, by 2017, I think there was already 17 million Bitcoins minted, yeah?
17.
I mean, there was already
yeah.
17 million by 2017. So that means all the OGs have millions and millions of Bitcoins, and those are the guys who only sell as they need. So I was watching something very interesting this week. I can't remember the name of the guys, but I will find you the link. I was watching actually a video. Can I share the screen, Gary? Can you let me share the screen?
Yeah, I should be able to do that.
So I made some screenshots from the video from the guy, from that YouTuber, which is quite fascinating. So he looked basically at a few things. It doesn't look only at volume, yeah? So it goes back to looking at number of wallets, and it was looking at self-custody wallets, yeah?
You should be able to share that actually.
No, also disable participant screen sharing. When I
Okay.
click on share screen, I think you probably need to make me a co-host, yeah? Or I don't think I'll be
Dangerous stuff.
Yeah, exactly. Yeah.
Oh no, now I can.
Yeah,
We're all
group.
decentralized here, so aren't we all co-hosts?
Yeah. Well, the thing is, this is one of the few groups I'm involved in that hasn't been Zoom bombed at any time, because I put on certain security type things. I just know now that having said those words and having just temporarily rechanged the thing.
Challenge. Yeah.
Exactly.
So can you see the screen here?
Yep, we got that.
So I'll make a screenshot. So what this guy said, he looked at the number of wallets with 100 BTCs or more. It has been declining since 2017. So that means since 2017, people that have more than 100 Bitcoins have been cashing out over time. And you can see in the graph, it's the orange bit here. Then you look at the self-custody, and he was very clear, this is about self-custody, yeah? And more than 10 Bitcoins, it means that a lot of them exited at peak in 2021, yeah? So there was quite a few. Well, you can see there was a big drop there. It was kind of more or less the same since 2017, yeah? It stayed there more or less, but then there was quite a bit, yeah, that exited at top, yeah, which was whatever, 61 in April, yeah, last year. And then he looked at self-custody of more than 1 BTC, yeah, it has been really neutral since March 2020. So there was not many people selling, yeah, there was a bit of a drop here in 2021 as well, but it's been kind of a neutral. So who's actually buying Bitcoin? Yeah. And there's an answer for that. And I'll post the link. I'll find while we are on this call, the link, and I'll put back to you. But so these are some of the things that got me thinking and pick up on what he was saying.
Yeah, that's my point. Not many people.
What's happening? What's happening?
It's the same question as who's selling. It's not many.
What's happening is really, these are the bots that are skinning people. So all of these whales, I don't know what's going on, but there's probably 2 or 3 groups of people that have bots. And it is really what puts spot sell pressure, yeah, is really people shorting and longing. And it is about them putting their crypto as collateral and going to borrow. And then, of course, they'll buy, and then get everyone getting in, big funds. I mean, let's not forget that Michael Saylor bought another, I don't know how many tens of millions of Bitcoins, at 57 or 58K, whatever it was, So there's a lot of these big funds that are buying, but all of that pressure, it comes from really people just playing up, just longing, shorting. There's this liquidation going on. The bots are killing it. It's very simple. So I think that if people stop shorting, and longing, BTC will reach very, very quickly the 100K mark.
But why would anybody want to do that if they're making money from shorting and longing?
Yeah,
it's a speculative, heavily manipulated market. We know that. Why would anyone want to stop doing that?
Yeah, I know. And I think I was chatting with a few guys, about these. And some guys have the view that a lot of the traditional finance blokes that I used to do all of this stuff, and are very good at shorting and longing, it's their game for many years. They felt attracted by the volatility, potential volatility, and it's in their interest to create these massive volatility cycles, and that will erode confidence from traditional investors to join the crypto market, because if it's so volatile, traditional investors kind of feel a bit scared, So we're going to stay on this yo-yo
that proves
for a while.
the longest and most stable and most successful investment strategy, which is there's always a bigger fool than me strategy. That's what Bitcoin is by definition. And those whales and those manipulators just do that the whole time. They don't really actually care what the actual price is, because the price can be anything. There's no rationale for the price at all by any economic modeling. So they will manipulate until such time as a regulator decides to get involved, and they're not supposed to be manipulating markets, because manipulated markets are bad for society. And if you look at markets in other, well, this is my question, securities, let's not call it security, even currencies, they don't allow that. And even with bots on the stock exchange, if a bot suddenly decides to start shorting and all the other bots follow it, they have a circuit breaker and they shut the market down for a few seconds a day or whatever. But they can't. You can't do that with Bitcoin because it's decentralized. Nobody's in charge of it.
But going back to traditional markets, even, wasn't it Warren Buffett said something along the lines of the purpose of the stock market is to transfer wealth from the foolish to the clever?
Yeah,
exactly. Yeah, yeah, that's right. So there's always a bigger fool than me, and I know that. I'm clever enough to know that, and I know how to manipulate based on that. I don't actually care about the actual price. It's irrelevant.
But I think
volatility and being able to do the clever things, as you say, shorting and longing, whatever the price, I'll always make money. Like a broker will always make money. He doesn't actually care what the price is for his client. The thing's moving. And he can hear out and take his commission. It's a different model, but the same principle. Most of the people financial trading are there to take money out of the system that's got nothing to do with the underlying value of the asset.
Well, I think that's the thing about crypto, that a lot of people are playing the game simply because they're riding the wave. That if they can sufficiently accurately forecast what the rest of the market is likely to do, and that was said very greyly with some caveats in there, rightly so, then they're quite happy. Again, they don't know if it's going to go up, down, sideways or whatever, but as long as they can have a good guess as to what the rest of the market's probably going to do, then they're happy.
They can do better than having a guess. They can do steps to make sure that it goes one way or the other, whichever they need to do, whether they're shorting or longing. Because, as you say, it is a readily manipulative market. It's a very thin market. It's what we're saying. Only a tiny fraction of those 18 million, whatever it is now, Bitcoin, only a fraction of them are being traded. So it's a thin market. It's a very illiquid market. So that immediately, you say, anyone that knows about how markets work says, right, stop right there. It shouldn't even be in existence. We outlaw that by regulation in all the other markets. And the very thing, what's sad about this, the very reason why the evangelism about cryptocurrency, decentralized, we don't want to have a banking crash again, we want something that's independent, is exactly falling foul of exactly the same people that caused the crash with securitized mortgages, with all kinds of other things in the past. That's, I think, the sadness of this now.
I have to agree that one of the things I really loved about crypto originally was the whole concept that you couldn't spend what you didn't have. And therefore, it was a credit-based system as opposed to a debt-based one. And then all of a sudden, before you knew it, you had people who were offering collateralization against your crypto. They were offering the ability to short, and it's like,
you're getting even kind of like the one I sent you. I think I've sent everybody around this thing, like case I'm involved with, where you've got now a NASDAQ quoted companies that are deliberately setting up services. I mean, almost the crypto, it could be apples, it doesn't matter actually, and saying, oh, we'll pay you interest on it. They're trying to mimic being a bank to give people a return on this asset, because it has no return. There's no company earning a dividend in there. So they're having to manufacture that. They're having to mimic the very thing that it's supposed to so they're now giving you interest on it. Where they're getting the interest from? Well, that's interesting. We think it's nothing more than possibly, and I'd say this allegedly, and not meaning to lie to anybody yet. Of course, if the court judgment comes against it, we can say openly, a Ponzi scheme. That's what a Ponzi scheme does. It gives fabulous returns to the people coming in, paid out of the money that's coming in from new people.
Yeah, and I think that this is where it is a real shame that I
agree with you.
I thought crypto was going to totally redo the financial markets and that, or at least create an alternative. But all it's actually done now is it's mirrored it. You know, so
you thought crypto was magic and make people honest. Well, what a lovely dream.
But the thing is, it was exactly, that's why I said, you know, let me rephrase what I'm going to say. The reason why many people, you know, like me and others been in this for 10 years, you know, is because that we set people to hodl, and there was a reason for that, because in 2017, 18, you could see already some entering, you know, and trying to exactly create that volatility. And that's why the term hodl came, you know, just hodl is the reason why some people foreseen this was going to happen. And the entering of these guys coming to, you know, look, any volatile asset is going to attract this type of people, you know. It's very simple. The only way, there's only two ways. And even though there is no, one of them doesn't work well. One is regulation, and we see the stock markets is regulated and it doesn't work. They still do the same thing, you know. And the other way is for people to let them play the games, because if they cannot make money, you know, they just are killing each other constantly, you know, eventually, you know.
Yeah, the trouble is it doesn't work that way. You kill off the innocent consumer. And that's the bit that the regulators,
that's the problem. I agree.
The US House Committee are worrying about. The fact it's now getting so big that innocent investors are saying to each other over dinner tables, oh, we shouldn't be putting some money into Bitcoin. Well, no, warning, you're not a skilled investor in the first place. And the last place you should be is Bitcoin. It's bad enough trying to fiddle about with day trading if you don't know what you're doing in normal stocks and shares where there are protections for consumers. So don't even think about it. But they're not don't even think about it. It's getting now so big and such a big bubble. And of course, all these people are helping to, this is the thing, the news, the massive balloon of news that goes out every day about Bitcoin and cryptocurrencies. A lot of that is fueled by people who want that impact on the general public, because it helps them in their manipulation of the market.
But there is a counter argument as well, that if people know that something is highly speculative, highly risky, totally unregulated, no money back, complete gamble in that, then should they not be allowed to make their own decisions?
To lose their money, to gamble their money. You're right, because they know when they go into a slot machine. When I go to Monte Carlo, and I'm not a gambler, because as soon as I win, I take my winnings and I walk out and say I can come back tomorrow.
Yep.
If I lose, I set a stop limit and I go. That's not a gambler. A gambler will take that winnings, think he can do even better, then end up losing it, because he knows as a matter of certainty, gamblers are there to only pay out about 20% of what goes in. I mean, that's a matter of fact, but it doesn't stop people.
No, but
they can make it. You're right. They're entitled to make themselves completely poor and get addicted to it and ruin their lives if they want to. We have freedom.
But it's exactly as you described there, that it was kind of almost an oxymoronic statement, that you said you're not a gambler, and then you acknowledge that you put in so much money until you hit your stop loss. So that means you are a gambler. It's just that you've limited your exposure and your risk.
No, I like to think I'm an investor in slot machines because I have a strategy and I stick to it. A gambler doesn't have a strategy. He just likes the thrill of thinking he's going to make that really big win. But if he makes it, he'll only go and burn it again.
Yeah. Yeah.
I mean, these
Well,
high rollers that they welcome
I
and give
think-
sweets to are there because they do win. They do. They spend $1 million a night and they may win 100,000, but the house knows that if they'll come back again tomorrow and do the same and waste another million.
We need to split the investor from the gambler. So the gambler I see as the guy that he goes to buy Bit or to FTX, and he knows that he's going to short or long. Yeah, very simple, you know. And the investor is the guy that is coming in and looking at, oh my God, there's a lot of stuff going on with NFTs and metaverse, new stuff happening. And they'll come and say, I want to make a buck. I'm going to learn. And they put some money. Yeah. And people, there's a shift at the moment from traditional DeFi and crypto investing to actually people investing in more in things that they think is more tangible to them, you know, like NFTs, you know, it's considered collectible.
Yeah, I mean, you and I are four square on that.
And then also gaming, you know, so there's a lot of people that are gamers.
Where this new technology is simply being used to tokenize more easily other things which have real asset value, have real earning potential. Don't forget the earning potential. It's not all investing is not all about making capital gains. And there was an interesting report out only at the start of the year about how that's what the problem is in the UK. Still, the London market is dying because it still has the old-fashioned idea that people want to invest mainly for dividend, which they do in the UK, and that's why there's such huge interest in bonds and in dividend earning tokens. Let's just call them. Now, since you haven't got that with a cryptocurrency, there's nothing to give it earnings. Then if you can relate it like you're doing to NFTs, to other things where you could generate, I mean, you could take an NFT of a work of art, put it in a gallery and charge people to come and look at it. You can make an income from it.
But that's something that really troubles me about the NFT space. And I'm quite active in this area as well. And I've actually worked with an art gallery. I've worked with some legal firms. I've done a few other things that at least with crypto, you know that you're just dealing with ones and zeros in the ether, which has got nothing that backs it, blah, 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 blah type thing. With NFTs, people seem to think there is this immutable connection between the digital NFT and the physical asset or the digital art or whatever. And they don't realize, you know, I've written a few times about this now, there's at least 7 failure points in the current structure of an NFT, where if any of those fail, you have a problem which is called persistence, which is, you know, will it stay? And the number of people who are paying ridiculous amounts of money for things right now who don't realize that there's a risk of a persistence failure, to me, that's a far bigger gamble, because they're buying things that they don't realize the real risk. And by risk, I don't mean a price going up or down. That's just volatility. That's just the market. But that they could actually lose access either to the underlying asset or to the NFT or to the blockchain or whatever. That to me is real gambling.
Yeah, and that's where a regulator is obliged to step in and say, if you are, it's not just the thing itself, it's all the structure you're putting around it, between you getting rid of your dollar for something. If between you and the thing you think you're investing has got all kinds of, as you say, you call them, you know, risk points and what did you call them? Something other points.
Well, it's a thing that's known as persistence failure. Because
persistence failure, whatever, a way it could fail, then and you are tying it to a real world asset, then that is regulatable, definitely, because that then falls four square into other things where you are sending a dollar down an electronic pipe and getting some stake in a company. I mean, it's all only digits and data going backwards and forwards after all, but it's very heavily related. And even the systems that the financial houses, the trading houses, and I've done some expert witness work on that, are themselves audited by regulators. You know, you can't put, they do, and they get away with it, but you're not supposed to put in little trapdoors that siphon off little commissions to yourselves here and there that nobody can spot. So you're not actually getting what you think you're buying at the price you're getting it at, and so on and so forth. So all that is very heavily regulated already, and there's Basel,
this is going to change.
goodness knows what else, but none of that yet. I don't know what it is, how the regulators are looking at NFTs, Fernando.
So
How's that
this is
going?
going to change. So one of the big drivers of legislation for the crypto market at the moment is the European Union and Dubai. Okay, so the European Union already came up with their law. Yeah, that is now sent to all of the countries for them to review, final review, and then they're going for approval. And one of the things that I picked up from that, and I posted on a few groups already about it, is that NFTs are okay. They'll say continue as you are because it's art and collectibles. Yeah. So there's no regulation for that. Simple as that. Yeah. And there are already laws for that. If you sell anything above $10,000, you need to do KYC and ML. And the great majority of the platforms were breaking the law. I don't know if they all have corrected that or not already. Okay. Second, if you want to launch a token, yeah, fine. You can launch a token in European Union, not a problem at all, as long as you have an MVP of some sort and that token has utility on it. Yeah. So you need to, if you want to use the platform for whatever reason, you can have that token. If you don't have an MVP, if you're just starting and you still want to raise money by creating your token, there's clear guidelines on the marketing because a lot of stuff is promoting too much, you know, so they kind of are regulated on that. The thing that is going to fix, yeah, a lot of the things that we're talking about here, manipulation of the markets, yeah, is the regulation on stables, yeah. So very, very heavy regulation on stables in the European Union on this law. And I totally agree with that because what's happening is all of these guys that are manipulating, they just go to, I don't know, Tether and hey, print me 1 billion. Yeah, they'll give collateral of their own crypto and they're just gonna use that 1 billion to push the Bitcoin up and dragging everything else, you know. As they are doing that, they are shorting and longing people, they're going to borrow more. So very soon, we'll be able to identify who are those people manipulating the markets every time they go and give their crypto as collateral for stable coins. There's no way that this is ever going to continue because as soon as a stable coin wants to operate in a market like the European Union, which they're not going to dismiss, I don't see Tether to say no, yeah, they will have to. They will have to disclose who are these people that are giving collateral and printing $1 billion of USDT, for example, yeah, because it's mainly USDT that is driving this up. So there's also legislation. Part of that legislation is the exchanges. They are, I mean, they went quite a bit on them, and there's quite some of the regulations they put on exchanges allows them to control a lot of what exchanges do at the moment, which is we don't have any view whatsoever what's happening internally on an exchange. So I think we probably are about 1 year away from at least having one country, yeah, and potentially at least two. So Dubai might come with some legislation around that within the next 12 months as well. So I think we're going to see things changing. Until then, I don't think anything is going to change. And one more thing is we have to understand that a lot of the traditional market players came to the crypto market. So I don't believe in the BTC cycle like people say all the time. Yeah, I think this is more aligned to the traditional cycles. You just go up, go down, up, down, and that's how they do it, you know. And the manipulation of the market is exactly what happens on the traditional markets is happening the same thing on crypto. But because there's no regulation, you see a lot more volatility. That's all. But I think in 2 months you'll start to see Bitcoin going up like crazy again. You know?
So maybe let's bring Pete back in on this a minute. Just want to say hi, Rob. Thanks for joining us. But Peter, in terms of, because you look at the markets and that, are you seeing any like more repeatable trends coming through now that are more consistent in any way?
And consistency, no, kind of this Bitcoin cycle has been different from previous. But as such, I mean, yeah, there's kind of always kind of people doing some questionable things here and there, etc. But large scale manipulation, like we haven't seen any evidence of that. And kind of the volatility is what you would expect of a market of this kind of stage of the development, but the volatility of crypto is going down over time.
Are you tracking against specific wallets or against pools or anything like that then?
I mean, we look at the kind of standard kind of last node kind of metrics of kind of long holders, kind of short holders, liquid, illiquid supply. And you kind of can see kind of the supply passing between kind of for long term, they kind of buy in market weakness, selling to market strength, and the short term holders to buy kind of in FOMO, and then they kind of panic sell, which is kind of pushes the market down again, while the kind of sophisticated players can tend to accumulate again. And then also kind of in this, as well as traditional markets, it's the retail traders that tend to cause the volatility relative to the size and the institutional guys that tend to have very little impact on the price because they buy steadily and scale in and out.
So it's almost as was been described earlier on, that the retail, so the consumers are very much the froth on the top, but the underlying is still, you know, the whales and everything. But I wondered as well, are you seeing any activity with the length of time that the miners keep the coins these days? Because that always used to be an interesting one, as to at what point does a miner sell off what they've produced, because they need to get a return on their investment on their hardware. Are you seeing anything?
They tend to kind of follow the long-term holders in that they're selling to market strength, and they kind of hold when the price goes down.
Which makes sense, that ultimately, if they've got a you know, effectively an operating cost of how much it costs them to mine a Bitcoin in inverted commas, then I guess they want to hit break even plus a margin on that. So they're going to be tempted to retain.
Over this kind of short term, up to kind of a couple of months, to do time their sales. And if you kind of trade in a shorter time horizon, over days and weeks, kind of watching what the miners do can be a trading strategy.
Yeah, because have you seen anything? There's been stuff in the news, and I'm always cautious of anything in the news that I keep saying that Bitcoin prices are affected by the butterfly flapping its wings in the Amazon more than anything else. But one of the things that was picked up by some of the crypto press was Kazakhstan, and that was meant to be quite a major mining community, which is obviously going through a lot of civil war and conflict and everything right now. Have you seen any kind of impact on that side of things, or is that not what we'd pick up on?
Yeah, I mean, I don't know specifically about that. Okay. I mean, we kind of originally recently did a bit of analysis looking at the effect of news on crypto.
Oh, yeah.
I mean, it's sentiment based on kind of mostly kind of Twitter sentiment. And what we found is kind of regardless of if the news is positive or negative, price tends to go up. It's only the odd kind of news, particularly around kind of hacks, where kind of price tends to fall.
Okay, because I know I did a joke one about a year ago where I just got the price of Bitcoin for the year and looked at the peaks and the troughs. And I then went to, there's a website that gives you what the news items for a particular day were over a year. And I mapped the peaks and the troughs to news about Premier League footballers being bought and sold, I think it was. So it was highly correlated, but clearly not causative in any ways. Fernando and I often have that conversation about correlation and causation.
But look, the Kazakhstan it's just people trying to associate that. For me, it was an excuse for someone to actually dump it, if you know what I mean. They wait, you know, for something specific so they can go and press the button. Because look, I think it's 12 or 13% hash rate is in Kazakhstan or thereabout, you know. Just being switched off, Bitcoin network continued. I mean, nothing stopped really, you know, it just shows how resilient it is. Just 12% hash rate gone, and so what, you know? Maybe cost a little bit more than transactions, but it's not a big thing, you know. I don't think those things have anything. Yeah, sentiment in general, yes, they might have some correlation, you know.
Yeah,
but causation, no, that I don't think that happened.
It's certainly felt as though people were putting out a fear factor in order to drive the price in some direction. No different to how we see every few months, oh, the Chinese government's just banned crypto. Has it? I thought it was still banned. I didn't know that. Can you ban a ban thing type thing?
And just remind you. Oh, they're reminding us. They ban crypto. Oh,
yeah. Oh, it's still banned.
And talking about mining, so mining costs for each Bitcoin. If you pay more than 18 to 20,000 for all your expenses on mining Bitcoin, you know, you are really having a bad deal. I tell everyone, just send it my way, and I get them at 20,000, and I'll still make a lot of money, you know? Mm-hmm. So it means miners are really, really killing it for quite some time, you know? They only sell when they need to pay electricity because they already cashed in quite a bit. I don't have any clear information about that, but I just know some of the miners out there, and I know that they actually cash in slowly, you know. They do not like disrupting the market. Yeah, so as they go along, as it goes up, they keep selling, you know, and somebody is buying. But you know, if you look at how much people are getting the mining at the moment, that people really understand mining, it's about $12,000 to $14,000. So I don't think there is any correlation at all with mining with this going down, you know, at all, you know, because they're very careful. They don't want to disrupt big time, you know.
Yep, that's fair. Stephen, I was conscious you dropped a note to me about there were a couple of topics that you're interested in chatting about. Can you remember what they were and could introduce them now?
Specifically on Bitcoin as of 2017 and 2018. Interested to know, I mean, I've already circulated some of you, to whether, what the view was as to whether the SEC regarded, the SEC specifically, the United States, regarded Bitcoin in particular, but maybe Ethereum and cryptocurrency generally, but really Bitcoin and Ethereum as a security back in 2017, 2018. I mean, you may even say today, that may be a different situation today, but I don't think it is very different, actually. I think the answer is pretty clear. They didn't, and we have statements from them at the time and shortly after, which make it clear that they do not regard Bitcoin itself, the actual cryptocurrency. Forget anything else you might do with it, like sell it. I'm just talking about. And I'm comfortable with that because at the end of the day, it's just, as you said earlier on, Guy, it's a set of ones and zeros on a server generated by an algorithm. Yeah, so that's what the whole of the data processing industry is about. If they said that was regulated, they'd have to look at everybody else's algorithm and decide that some ones and zeros are regulatable and some aren't. It's what you then do with it and how you package it and what representations you make to attract money in, i.e. US dollars, as that may become a regulatable activity. But it's pretty clear as of 2017 and 2018, and indeed as was said many times in the House committee hearing they had about a month ago now, was it, or 3 weeks ago, just before Christmas, when they had some very good presentations. Several people said in both members and the experts they had there from companies like Ethereum and who else, you may remember who was there, I can't remember. They all said quite often cryptocurrency is not a security. I mean, as a cryptocurrency. I'd be interested in if anyone's got a contrary view to that, and if so, on what basis? Back in 2017, 2018 is what I'm particularly interested in.
So I'm just trying to recall back that there was this whole thing originally around crypto of, is it money, or is it a security, or is it a commodity, blah, blah, blah. And I seem to remember around about 2018, did the SEC not look at Ethereum and make a decision at the time that they thought it was a security, but they were choosing to not prosecute? I thought that was the story behind it, because that was raised in some of the early SEC cases around ICOs in 2018. that I think someone was trying to counter the argument of, well, you didn't do it with Ethereum. So go on, Fernando. Go on, Peter.
Kind of what I said. Well, the kind of CFTC is classified kind of Bitcoin as a commodity, hence the kind of their futures. And then kind of with, they said kind of Bitcoin wasn't yet kind of a security. And they said kind of Ethereum at that point in time it wasn't a security, but they kind of left the door open as to perhaps it was a security at some point in the past, but kind of decided not to kind of prosecute.
Yeah.
But I kind of got this kind of process now that, I mean, the key thing kind of in the US is the Howey test. And the thing that Bitcoin and Ethereum don't have is a common enterprise. It's kind of sufficiently decentralized for it to not be classed as common enterprise. But kind of Ethereum starts off quite centralized, and so they left the door open that it might have been a security when it first launched.
I think the other thing, particularly with US regulators, is there's about 13 regulators, all of whom are staking a claim. So as Peter says, CFTC are seeing them as like...
Yeah, CFTC definitely said in terms that it was a commodity.
Yeah.
And that's why they did regulate it on the Chicago Futures and Commodities Exchange.
Yeah.
If anyone ever did anything on it, I'm not sure whether they ever did.
And the same for Ethereum as well with their launch of their future.
Yeah. No, they said cryptocurrency, qual cryptocurrency, whatever it was and still is, as far as I understand, in the CFTC's ruling, a commodity. But it doesn't get you very far. What the hell's a commodity? How are you defining
it? Depends on the crypto. They've only done that for kind of Bitcoin and Ethereum. The others, I haven't heard any kind of specific things like kind of what's it called? XRP, like of course in the out in the course, but
well, hopefully the Ripple court case, when that completes, will set precedent in some way around a lot of this.
Yeah, well, I think it will distinguish even more between the pure cryptocurrency as distinct from the way you launch it and get money. Because what they're really worrying about is the representations made to ultimately the public. The whole bank security regulation is to protect the innocent consumer in a way, ultimately. Yeah. So if you're just generating ones and zeros on a server, who are you hurting? You're not making any representation to anybody.
Yeah.
But you got
a question, because I want to build my own blockchain and build my own token. Forget about selling it to anybody. I just want to do it. So I've got my own. Thank you very much.
Remember the SEC chairman before, the previous one was Clayton, wasn't it? He said that Bitcoin was not a security. He said it on a live interview.
Yeah, he did. Yeah.
I mean, there's many conversations before that. And there was also the comptroller, the U.S. Office of Comptroller, for currency. I think they said it was 2013, wasn't it? Where
they have gone back even further. You're right. Yeah.
Yeah. I mean, it goes back, and they said, Bitcoin, and they classified it, and it's all written already. So I don't know why people are picking up on this, but I know that you are involved on some.
Yeah. No, this is for another case which goes back to an agreement that people had to invest in certain things.
Yeah.
Back in 2017, 2018. So the issue arises as to whether, as the claimant is alleging, the person infringed securities law by not being properly licensed and regulated.
Yeah. Your other thing to consider, Stephen. Sorry, your other thing to consider, you were mentioning about what does it matter whether it's a commodity or not, is that has taxation implications.
Well, it has all kinds. I mean, once you start getting into this, start deep diving, you go all over the place. You realize that you have to look at every possible financial product that's ever been invented, some of which now no longer exist, and try and see how they were treated at the time and what's changed and what hasn't changed.
Yeah. So
as you say, and the multiplicity of regulators doesn't help. And then when you go into this is just the US I'm looking at for this case, but when you then go into the international sphere, and the most international regulations, I think, in the banking sector, because we still have distinct stock exchanges that have their country based, and there are some international coordination. But of course, with banking, which is for backed currencies, and they are international, they are internationally exchangeable, and by international law, they have a regulation about that. And we see how well that works, because so many people get billions of penalties for laundering. What, HSBC? You'd be laundering money? What? I thought you were supposed to be a regulated bank. How the hell do you even manage to do that in the first place? Where was somebody looking the other way, and how much did you pay them? You know,
I'm sure you keep an eye on what the latest releases out the Transparency Task Force give. They're now producing a database of fines for breaches. And what you eventually realize is that KYC and AML breaches and this kind of stuff is simply something that the banks treat as an overhead cost, not as a punitive measure to stop them from doing it.
And like so many regulations can impose fines, it doesn't actually help the victims, but it gives them a lot of money to go on doing this wonderful thing of investigating people, which is fun. It's a fun life doing that.
Yeah. Well, unfortunately, I had that conversation with a group of people the other week who said, oh, if we make it more transparent about how big the fines are, that will then call the banks to account. And I said, no, all it shows is how much the government is earning in revenue from the fines, so that they're complicit type thing. So, and Rob's laughing at that.
The ICO, I mean, I'm absolutely totally disgusted with the ICO. It's not their fault. They're totally underfunded. And they occasionally come out with these huge fines, which gives them a bit more funding for a bit longer. But do they do anything for the victims of a data hacks? Absolutely nothing. A company a rap on the knuckles and fine them a few millions or tens of millions from time to time if they're lucky.
It'll only change when it becomes a criminal offence and you go to prison. Once we start sending directors to prison, then things may change.
Well, of course, there is laws to do that. And what's interesting, the time it's like to happen is you remember the company that got sold. What's it called? They've now got criminal, they misrepresented their revenue from license fees. Not Amadeus, it begins with an A. British company. Do you remember that? They're now in the States facing criminal prosecution for wrongfully misrepresenting their company's earnings and the sale price, therefore.
Okay. Yeah. I'm not going to say the name. I think it is, in case I'm wrong, and I'll subject myself to litigation.
Be careful. You're exactly. No, you can always manipulate because you have the button there.
Yeah, hold my hand up. Remember to edit this bit out. Yeah.
But anyway, no, I mean that's a matter of record. They're facing unusually. You have directors of somebody that sold a company for many billions facing potential under US law, because US law is pretty gripping on that basis. They will send directors to prison. Yep. As we will sell Ponzi to prison.
Oh no, well, bankers never go to prison. No. Tell me which banker from 2008. Tell me which banker from 2008 that went to prison. Not even one.
So the question was, I'm sure you guys can help me just like that, is I want to build by the end of tomorrow, I want my very simple blockchain with my own token on it. It can be a token, doesn't have to be a new coin.
You live in France.
I'm not going to try and sell it to anybody. It's just ones and zeros, but I want.
You live in, Stephen, you live in France, yeah?
Yeah.
European Union law coming out. I think I sent you the link. If I didn't, I send you for you to read it. Yeah. You will not have any problem in creating a token in European Union, Yeah,
but I know I have a problem, but how do I do it technically?
So I can tell you. Listen, just Google this, yeah? Substrate. It's a blockchain. Substrate is a blockchain. It's open source, created by a very well-known guy, and that runs Polkadot. Okay, so just do it. It's very good. It's really good. But you need to learn Rust. If you learn Rust, then you'll be fine.
So, Stephen, the immediate question, and this is being a bit technically pedantic, do you want to have your own blockchain where you'll have your own cryptocurrency, or do you just want to create a token?
No, I don't mind which. But okay. Yeah, I know the difference.
So if you just want to spin,
if it's a token, so I just write on the
So if you just want to spin up a token, which is the Stephen coin, then you can just go and download some software off something to create an ERC20 token on Ethereum, and you can do.
That's what everybody. That's the most common thing I've found.
Yeah, and it's just a few lines of code. You can spin it up. You can create it. There's loads of YouTube videos actually on how to do that.
Yeah.
Which can talk you through how to do that. If you want to build your own blockchain, which is how you create a cryptocurrency, because bear in mind, a cryptocurrency is the native mechanism by which a blockchain is secured. So you only have one cryptocurrency per blockchain, but you can have many tokens against the blockchain. To do that, you take a copy of something like Ethereum or Quorum or whatever, and you'd install that and you'd run a few nodes or whatever. That's a bit more complicated. So yeah, if you want to create your own token, just as someone did it a while ago on Russia Today with Max Kaiser, and they created Max Coin. And I think they just did 10 lines of Ethereum smart contract.
It's even simpler than that.
Yeah.
It's even simpler than that, yeah? Just install MetaMask on your browser, go to Remix, yeah? Just Google Remix, yeah? And then get from any site out there, the code. It's literally about 10 lines of code to create your coin. You just need to put what is the supply, yeah? Once you run that on Remix, yeah, just compile it, yeah, just choose whatever chain. You can even do it on Robston to test with, which is the testnet on Ethereum, and that's it. You just paid for the fee, for the transaction fee, and your token will be created. It's very, very simple. 1 hour maximum, you can do that.
Okay, very simple for you. So give me somebody that I can
Remix.
do it for me.
He's saying a person, not a website.
Okay, just do it. It's very simple. Trust me. You're a tech guy.
But I left that behind years ago.
Okay.
But where can I find somebody? Actually, I've asked around, and you just can't find anybody. They haven't got bandwidth.
I reckon if you just put a call out on one of my WhatsApp groups, or better actually the Telegram groups, and just
groups. I'm only already on 2. That's the James Bowater one and the blockchain dinner one. I haven't got time to go on all these other groups.
See, this is it. You're not on the ones that know how to do these things. You're just on the ones.
Right groups.
No, you're just on the ones who like to talk about it as opposed to do it. Okay.
I want to. Can we change subject? I want to give you my bit of caution.
I might come back to you on that, Gary. Anyway, maybe you might just at least put a little feeler out and say somebody might DM me if they've got. If they've got half a day, they can just do it for me and set it up. So all I can do is press on something on my laptop and use it. I don't care what's actually behind the hood, frankly.
Yeah, we can do it. Okay.
I want to understand it and understand what they've done, but I don't necessarily want to get in and own the techie.
But ping me a note and I'll find someone who can do that kind of thing. Okay.
Okay, I'll shut up now. Carry on.
Fernando, go for it.
Yeah, I just want kind of give a bit of caution to everyone for some stuff that I've been reading and about the current market. Again, people know this is not advice to anyone, of any kind, no financial advice. But Michael Burry got a NISDA, long puts against 800,000 shares of Tesla. That's 534 million by end of Q1. So him, Jeremy Grantham, these are all guys, traditional markets, big longers, big shorters, always playing in the market. It's scary. A guy that puts 534 million by end of Q1, short in Tesla. There's a lot of people coming that these guys are always insiders. So many people that I speak with say there's going to be a massive crash at really the levels of .com boom, a lot worse than 2008. So
Fernando, do you mean a crash that's indicative of a general market crash or just Tesla?
Yeah, general market crash. I mean, it's 534 million, short just on one stock. Oh my God.
What's the market cap of Tesla now?
Let's just say something again, let's put all this in context. That sounds a lot of money. But somebody, again, just reminded us, just on the BBC
but
radio.
It's not him only. That's what I'm saying.
The total capitalization of Apple reached 3 trillion the other day. I don't know if it's still there, but temporarily it reached 3 trillion. The total transactions average in the London stock market is about 8 billion a day. I don't know if that's dollars or pounds. The total transactions daily in just the Apple stock is 11 billion a day. I mean, 540 million is nothing for anybody to worry about in causing a market crash. It really isn't.
I just had a quick look. Tesla's market cap's just past $1 trillion.
Yeah,
So
it's not about
worth
that.
more than the top 6 other car companies or something put together.
It's not about that. Do
No.
you understand how shorting and longing works, right? If
Yeah.
somebody's putting their own money, 534 million in shorting just one stock.
Depends how he's doing it, though. If he's doing it as an option, then he's not actually spending 500 million. What he's saying is
Long
that
puts.
in the
I mean, it's a nice though.
okay, but is it a committed contract?
Yeah,
Okay, then he's
that's
playing with big
that's
money.
what it looks like. You know?
Okay.
So I mean,
Is that the
this is
strike
serious
price?
because sorry.
Is that the kind of the amount he spent on the puts, or is that the notional value of the puts?
Well, he's committed to 534 million.
It must be the notional, mustn't it? Because it can't be the strike price because it hasn't settled yet.
Well, it won't be the strike price, sorry, but it's like, is that how much you kind of handed over to kind of buy them puts, or is that kind of how much of the stock like them puts can represent essentially?
So
that must be quite a small percentage of the stock, mustn't it, in Tesla?
Yeah.
If it's worth
Yeah,
a
of course
trillion,
it is.
540 million is less than
compared
0.5%
with-
or something.
yeah, compared with that, what happens is he thinks that the stock market is going to crash, and the stock market is going to crash means Tesla is going to drop significantly, and that's why he puts 534 million. He's betting against Tesla going up. Okay, he's basically putting a lot of money, saying this is going to crash, and this is how much and this guy's going to kill it if really crashes by end of Q1.
But it might be.
Because I'm just reading something that he exited his short term in November.
No, looks like it's a new one.
Oh well, all I suggest then is keep an eye on it, because he may be right, or he may be completely wrong, and there's someone else who's doing the opposite side of the bet.
Or he may just be doing it for Tesla.
Yeah,
It isn't indicative. You could be saying Tesla is vastly overvalued. Well, I'd have some.
But Jeremy Grantham is also predicting really massive crash. He's not the only guy predicting this.
Yeah,
all of these guys, all of these big top guys in Wall Street are coming out and go to Bloomberg and they say we are predicting a really big drop.
That's because they're all short. They're all shorting.
Exactly.
but let's face it as well. That I could keep saying it's going to be a really cold winter this year, and I'm eventually going to be right. And it's the same with market crashes. Market crashes happen every 7 years, give or take. So if you keep saying the market's about to crash, eventually you will be right.
Yeah, but not only that, Gary, is the market is overvalued. Tesla is not worth 1,000th of what the price is at the moment. You know.
Agree.
So I mean, there's going to be a point. You know, it's unsustainable, you know, and it's gonna plop. It's gonna pop, and these guys are saying it's gonna pop by end of Q1. I tend to agree with that, because the way I look at things at the moment, everyone I speak with, everything I read, there's no liquidity in the markets. People are removing liquidity from the markets. You know, China, the central bank of China has removed liquidity from all the other banks. I mean, do you understand what that means?
So I think what you've probably illustrated, and it's really nice with us closing off on the hour, actually, so we'll have to finish in a minute, is that we're talking traditional stock markets now, which actually, right at the beginning of the conversation, we were talking about transferring a value of traditional stock markets. We're talking about how crypto is this new world. So maybe a safe haven, and this is not financial advice, blah, 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 is to consider exploring crypto a little bit more as a hedge.
That I agree.
The traditional markets going. A nice way to finish, I think. That's a great one. So I hope everyone's enjoyed today's session. Thank you all for contributing in that.
Go for it.
Yeah, I was going to say, if anyone's watching this on YouTube and they've enjoyed it, do subscribe, like, blah, blah, blah. But even better, everyone, do come along to a future session. These are really good fun when we get people going like this. So, guys, thanks for your time. I hope to see you again. As I used to always say, now go and wash your hands and be safe. Have a good one, folks. Bye now.
Thanks, Gary. It's been great.
Thank
Bye
you.
now.
Bye, guys.